There, let's bring in Scott Bauer to help us take a look at the numbers here. Looks like month over month, Scott, core PCE price index for May at 0.1%. I guess the only real concern here is it looks like a slight revision to the upside at 0.3, but the market seems pretty content with this data.
If there was a scenario, Ben, that the Fed, the market, everybody watching this could have written out, I think they got it this morning here. Right in line, which is great. You know, with what happened with CPI a couple weeks ago being lower than expected, I think there was maybe some concern that if this number was lower than expected as well, yes, that would put some pressure on the Fed to potentially lower rates quicker or increase that probability, but also add some concern as to the weakness in the economy. So we got a number that right as expected, not too hot, not too cool. We see, personal income up a little bit, but that spending number is really reflective of the consumer pulling back a little bit here. So I think this is a perfect number for what the markets and the Fed wanted. They're not going to do anything at the July meeting. I know coming into this report right now, it was about a 65% probability they were going to lower rates in September. I have to imagine that has ticked up a little bit.
Scott, I haven't looked at that yet. I will in a second. But just kind of to that point, I feel like all week we've sort of been in that environment, all month for that matter. One could argue all quarter, I guess, as you look back.
Yep.
Right? Slowing economic environment. But as I mentioned at the top of the show, one that's slowing at a pace that's acceptable for investors, for traders.
Exactly.
We're seeing a reflection of that in terms of the levels we're at as far as the indices near all-time highs. You just mentioned Bitcoin as well, up near those historic levels in our last block. We were talking about it. But also a reflection of one market that's very confident the Fed's making progress on their goals towards inflation, I feel like.
Absolutely, as slow as it may be and, is kind of grinding it out as it may be. But yes, they are. And again, I think this is a really good number. I know S&Ps and Dow, I'm looking here, are off slightly from the highs, but we're seeing rates come in a little bit. 10-year is down about 3 basis points or so. So this is a really good market. Now, or a really good number. Where does the market go today? Maybe the market this week got a little bit ahead of itself coming into this number. So I don't know that we're going to see a big, massive rally. But you know what? That's not what the market needs right now either. We need some stability. We need this kind of chugging along, grinding out nature if the market is going to sustain these levels here.
Yeah, we've got the FedWatch data on the screen. Looks like 64% for that September cut now. Thanks to the producers for that. And to your point, Scott, 4.29 to 4.26, right? So, yeah, we have come off a little bit in terms of the 10-year and in reaction to this data. So, again, all of this very appeasing for the market, right? You have the one kind of fly in the ointment here, I feel like, which is the U.S. dollar, the greenback to 106 this week.
Well, you know what? It has been unbelievably resilient. And as you and I have talked about, part of that, I think, is really because it's the only game in town. Okay. Because, other central banks and other currencies are really so weak at this point. I'm not so concerned about what the dollar is going to do to the market, what the dollar is going to do to commodity prices potentially, because of the fact that it is the only game in town. So I think we have to, we obviously have to watch the dollar, but I'm not sure that is as much of a focal point as it has been in the past.
Scott, I'd imagine you, as well as everybody else, into the weekend and throughout the week also have been watching the yen very closely, expecting to see something from the BOJ at some point.
Wait, what a debacle, quite frankly. And yes, I would expect something here. They cannot let the devaluation continue the way it is. So I would certainly expect something, imminent, whether it's tonight, over the weekend, Monday. They can't let this go on.
Scott, so to your point here, the consumer's slowing a little bit. The dollar, not necessarily a headwind that's going to become a major issue for stocks at this point. And again, we are seeing progress on inflation here, and the Fed, to their credit, seems to have gained the confidence of investors and traders. The one thing that we're kind of talking about here also is jobs, right? And this is, I would imagine, is the focus that where we're going to start to shift our attention into next week as we look ahead Is that where yours is being directed right now? I mean, we've got the non-farm payrolls headed our way next week, a holiday week at that, but definitely data to come.
100%. Now that we're, PCE is behind us, inflation data is behind us. Yes, that will be the focus here. I think we need to be a little careful going into that number here because of that outsized number that we saw last month, right? We don't need to be set up for a situation where, wow, maybe the expectation is much lower than like we got last month. We could see a revision that is a bit higher here, but the overall trend has been what the Fed wants to see here. My biggest concern, Ben, overall, is that all of the data that we've seen over the last 4, 6, 8 weeks or so is pointing to a slowing economy, is pointing to a slowing consumer. That is all data, though, right, that is in the past. The Fed, kind of doesn't have this ability to look in the future and say, wow, this is what's happening in the past. Is this going to continue? So they may actually be behind the curve a little bit in terms of when they lower rates, because things are grinding to the downside here in terms of a slowing economy.
Well, one could argue, and we were just talking about, we're going to look into it a little bit further here as well, but I mean, Nike results throughout the day,
Yep.
I'm sure that's going to be one of the topics of conversation across the network, a reflection of the consumer and some of those trends that we're seeing in terms of slowing economic conditions, and also tying into those jobs reports next week, right? As far as labor conditions, as long as they remain strong, in theory, we can sustain this environment in a higher rate, higher for longer environment.
Oh, no doubt about it. But Nike is a pretty big bellwether to, give us a look at the consumer here. And there's no question that the consumer has been shifting. The consumer has been slowing down. I really hope the Fed does take that into consideration.
Okay. I think a pretty good conversation to be had, right? Tech can't carry all of the weight here. You need to have a strong economy as well, and one that's got inflation in line and labor conditions near maximum levels here. So, Scott, appreciate you joining us. Scott Bauer, CEO of Prosper Trading Academy, sharing part of his Friday with us here on the Schwab Network.